So this is going to be the first lesson, first course lesson rather, for the daily candle confirmation strategy. So what I'm going to try and do is break this down into all of the different individual elements. I'm going to try to keep it as simple as possible. And then once I've explained all the different elements to it, I'm going to then essentially stitch it together, show how it works in terms of being a real strategy. And at that point, I'll also explain that when to hold, when to close the trade, in case it looks like it's going to go against you, and get into the intricacies of it a little bit. But really, for now, I'm going to start from ground up. So for this lesson, what I'm going to do is go over basically just go into candles and really break down candles into their basics, and show what a candle means, what a candle's trying to show, what a candle's telling, the different elements to a candle, so body, wick, open, close, and yeah, just so build it up from the ground up. Because obviously, with the candle confirmation strategy, the basic core element to it are the candles themselves. So what an assumption that I've made generally is that you guys have an understanding on what the terms that bullish and bearish mean. So the reason I'm just going to explain these a little bit in terms of what that looks like on a chart is because whether the market is bullish or bearish is fairly crucial as to what you're looking for the candle confirmation strategy, particularly for the daily, because you want to try and trade with the momentum. So, for example, if the market is really bearish, you can get into a bullish candle confirmation trade, but it's not preferable. You'd way rather get into a bearish candle confirmation trade and just follow the tide down. So as I say, for the bullish and bearish aspect, I'm going to keep it fairly light touch, because I'm assuming you know what the terms mean, and really all I'm showing here is just a graphical representation of what a bullish and bearish market might look like. So as you can see here, so if you're assuming you're understanding the phrase bearish, so bearish essentially is just when something's being sold. So if people are bearish on something, it means that people are expecting the price to go lower. Likewise, bullish is the opposite. If people are bullish on something, it means they're expecting better things from it. They're expecting price to go up, value to go up. So for Euro US dollar, for example, on here, we can see that this is very much a bearish market. Not that I trade trend lines, but you can see that there's very much like a clear trend that's just going down and down and down and down and down. So for this kind of market, really you'd only really be looking for bearish candle confirmation trades on this. And then likewise on the flip side, say something like Euro CHF, you only really want to be looking for bullish trades on this. As you can see, the trend is extremely bullish. Steep gradient on that trend line. Again, not that I try trend line, but just to show as an example. So the reason I am highlighting that as an initial point is because when you're doing the candle confirmation strategy, the first thing you want to look at is going to be, well, what's the market doing? Is the market bearish? Is the market bullish? What am I looking for? Am I looking for a short or a long? Probably worth actually pointing that out. So short and long are two terms essentially for trades. Again, if you're not familiar, you can Google this to have a little bit more investigation on your own side, but it's fairly straightforward. Long is if you're doing a trade that is bullish. Short is that you're doing a trade that's bearish. So say, for example, I wanted to place a trade here on Euro USD. I can see it's bearish, so I'm going to put a stop. There's no real science behind this. I'm just doing something, for example. So this would be a short. A short trade is where you're looking to follow the tide down, is where you're looking to continue bearish momentum. A long trade would be the opposite. A long trade would be where you're looking for price to go higher. Obviously, as you can see, in a bearish market, you can get counter trend trades. I'm not the best at them. I don't really have a strategy set out for them, so I tend not to try and look for them. And obviously, as you can see, particularly for trades where you'd hold for days on end, you want to be going with the tide. But yeah, long trade where you're buying and you want price to go up. Short trade is where you're selling and you want price to go down. But yeah, so with a bearish market like this, you'd be very much looking for shorts. But as mentioned a minute ago, first thing you want to look for is what the market's doing. That's going to give you your idea on what trades you want to be looking at. So with that said, I think that's a good place to start. But really, what I want to go over in this lesson are candles, and basically just break down what a candle is, what candles try and show, the core elements to a candle, and essentially, yeah, what's contained within a candle. So what I'm going to do is just highlight this candle here. So going to bring special attention. If I get rid of, I'm going to keep that there because that's going to get rid of things for me. But if I get rid of as much noise as I can, whatever, pop that over there for now. Right, so let's say paying attention to this daily candle from Thursday the 2nd of Jan. So there's about three or four basic elements to a candle. So you've got the wick of the candle, you've got the body of the candle, and you've got the open of the candle and the close of the candle. And each different candle tells you a story, which I'll get into that in a moment. So if I just take a quick tool, so as you can see, most candles look something like this. Just see if I can find my line tool. So most candles are going to look something like that. Some of them are going to have a slightly higher wick. But yeah, most candles are going to look there or thereabouts, so like that. You've got what we call the body of the candle, and then you've got the wicks, the two wicks either side. So what this is showing, so in a bearish market like this, what this is showing on my red candle. So again, for further clarity, so my chart is set up such that green is for bullish candles, red is for bearish candles. To be fair, you can change these into whatever color you want. For me, it's just cleaner doing this. You can change your charts to look however you want as well. To be fair, I mean, you can have a line chart. I would find it impossible trading like that. You can have volume. Well, I can't have volume candles, but you can have hollow candles. You can have bars if you really want. Again, none of that I'm comfortable with. I've never traded like that, so it's not particularly for me. I find it way easier to just stick with markets. No, stick to candles, sorry. But you can change the colour of the candles. You can have it however you want. Some people have black and white candles. Some people go like purple and white. For me, just red and green, it sticks out to my eyes a lot easier, and it's preferable for me. But regardless, so for my candles, so my red ones are my bearish candles, my green ones are my bullish candles. So let's say this is a bearish candle and price comes in, and maybe the day before price was like such. It had a small wick there. Let's give it a big wick on this side. So for the candle we're paying attention to here, price would be opening at this higher level, and it would be, so that basically means when the trading day opens, which a new trading day on my trading view at the minute for UK time, a new trading day will end and then begin at 10 p.m. at night. Which, yeah, obviously not midnight, which just to add a little bit of confusion to things, but yeah, we'll get new candles open up at 10 p.m. So as 10 p.m. starts, so this candle comes down from the day before, opens there, closes here, and then as 10 p.m. opens, price will open at this rate, and then the wicks basically just show the entire range of that trading day, which I'll show properly in a minute with actual like live example within this Thursday candle. But yeah, price. This means that price opens here, and closes here. Then for the next day, price would open here, and let's say maybe the next day there's a little bit of bullish momentum, with your wicks either side. So then for the next day, this will be a green candle. Price would, in fact, let's just make this a little bit of a different color to show you what I mean. And then next day, price would open here, maybe it would trade down, and then have a bit of a retracement. Then it would move all the way back up, trade up here, then come back down, and eventually at 10 p.m. at the end of the day, price would close here. So to show all this opening and closing and what that actually looks like in a trading day, I'm going to use this Thursday as an example. So if I select here, and then I'm going to make this, 1 hour is fine. Right, so from the Tuesday close, then we miss a day for the Wednesday because it was a bank holiday. But then coming into that Thursday, if I click play, so this is basically just showing you the whole actions from that Thursday daily candle. So as you can see, price opened up at the same level, at the same price that it closed from the day before, which generally happens throughout the week. It generally happens. The only reason why you'd maybe find some days price opened at a very different place to where it closed is if there's like major market slippage. So you can see, for example, on these candles from November so this was a Friday close. Price closed here at 104,190. Then over the weekend, there would have been some sort of news happen over the weekend that would have basically impacted the markets ahead of them opening. So essentially what that will mean is that there's been a whole bunch of either sells placed over the weekend or buys placed over the weekend, that then as soon as market opens, there's a completely different price as to where it closed. It generally doesn't happen too much. If there is slippage, so if it's what we call slippage, if there is a little bit of that, it tends to be a handful of pips. It tends not to be as severe as what this is. So that is 10331. It's nearly 90 pips. It's about 85 pips. So clearly quite a lot. But as I say, that very, very rarely happens. If you look across generally, like where, for example, this candle was closed, it then opens at the same rate. It closes there. Then when that closes, it then opens at the same place and then closes there. Then when that opens, it opens at the same place, then closes down here. Generally, there's very, very little slippage, but it can happen over weekends. And weekends tends to be when it's a little bit more severe. But as a rule of thumb, price will open the next day where it closes the day before. So as you can see here, price opened on this green candle at the same place that it closed on this red candle. And then if we just look at what price did throughout the day, so what that's showing is that price initially, again, if I just come back to it, maybe let's make this, okay, that's annoying, that's the lowest I can do. So if we come back to it, you can see price pushed up, and then price basically reversed and started to come down the continuation and continuing the momentum that we've had before, which is bearish. So what that's showing is that these wicks of the candles, think of it, and that's said quite helpfully, to be honest, just think of it literally as a candle and a wick. You have the small little ropey bit here, and then the body of the candle here. So as you can see with that price, price had basically pushed up, but this was the highest it got to throughout that day. Then price had basically rolled over and started to become bearish again, with price pushing all the way down here before there was a little bit of, I guess, support, a little bit of momentum found, which then forced price to come up here and close up here. So essentially, the candle is telling you a story. So, and well, that's what the daily candle rather is showing you a story. Now, if we were to drop down, and the story it's telling you is basically what price has been doing for that day. So if we're to come down to the 15-minute, this is what price has been doing all day. So in that one daily candle, this is everything that price has been doing. So it pushed up and up and up into this level, and then rolled over and came all the way down. And then I believe we're into a new day pretty much here. So yeah, in that one candle you can see with the two wicks and the big red body, this is everything that it's showing you. And essentially what this is showing you, again, come back to my bar. Essentially what it's showing you is that there's still really strong, bearish momentum as prices, even though price had a little bit of a pullback, it continued down a lot further, and then had this really solid close down here, which is just a further continuation that price is very much bearish. So when we are looking for a candle confirmation trade, this is the sort of sign that we'd want to see, really. We always want to look for a strong close before the low of the day before. And on that note then, so within this one candle, as I jumped down a minute ago onto the 15-minute, it essentially just showed the story of the day. So if I put a little day divider in here quickly. Right, so where do we get to? 10. So price opened here, price closed, basically here. So this is your entire day. This is your entire trading range within that day. So essentially, what those wicks put in is a high of day here and a low of day here. So whenever I'm doing the daily outlook like review videos for what I'm looking for, I always say that I'm looking for price to retest the low of the day. And this is basically what I mean by it. So you can tell what the low of the day and the high of the day are based on the wicks of the candles. Might have to remove those blue lines because that's going to get a little bit blurry. But yeah, I'm basically just looking at what the two wicks of the candles are telling me. So at the bottom wick, we've got the low of the day, and at the top wick, we've got the high of the day. And that's, yeah, I think that's really just a breakdown of what candles are showing, to be honest. Yeah, I've not really got too much to expand on that, so I think that's a good place to wrap up for now, really. And then I can get into more elements of the course going forward. So, for example, I think next I'll get into a little bit on support and resistance. There'll probably be terms that you're familiar with or have heard of before, but I'll break down what support and resistance mean in terms of the candle confirmation strategy, where you can find your different areas of support and resistance that are relevant for it. There's lots of different support forms of support and resistance. So, for example, the support and resistance for the daily candle confirmation strategy is very different to the support and resistance in the 4-hour strategy that Joe and I work on. So I'll leave those elements of support and resistance to Joe. But yeah, for now, I think the important bit to grasp from this lesson is just what the candles are. So whenever I'm talking about candles, you have a decent understanding of what I mean. So if I'm saying the low of the day before, you know what I mean by that. So if I would say to the low of today, you know that the low of the day is the bottom of the wick of this candle. If I'm mentioning the high of the day, you know I'm talking about the top of the wick of the candle. And if I'm saying where a candle has closed or where a candle has opened, you know that I mean either where the red body of the candle starts or the body of the candle ends. Obviously, if you have any questions, shout. Any feedback on this would obviously be greatly appreciated. It's the first time I've done one of these course lessons. For me, obviously, it's a little bit difficult for me to break it down and put myself in the shoes that I was in a handful of years ago, because I can't. It's a little bit difficult for me to remember what I knew then and what I didn't know now, and what was useful then for lessons in terms of my understanding and terminology. So I don't know if I've rushed things too much or not. So yeah, if I have, shout, ask for further clarity on things, and I'll get back to you. Or if needed, I can upload like a follow up to the lesson. But yeah, any feedback greatly appreciated. I hope it's been useful, and if things aren't clear at all, shout and I can do a follow up to further clarify things. Cheers. Have a good weekend.